We woke up this morning and saw some heavy selling, though noting that even overnight, the futures were down even more. So you did see that they started to come back up off the lows. What did you make of it this morning, and what were your thoughts?
Well, honestly, I want to thank President Trump for having the market take a little bit of a breath here and pause and give us some ability to buy some things that are selling off today that really should not be selling off at this time. But of course, everyone's kind of suspect of the tariffs and what the economic side of that's going to mean, other than the comedic side that I mentioned about President Trump giving us a discount. So where we are today is, the tariffs are in place. We haven't seen very much retaliation other than Canada. We got a suspension for a month on Mexico. But between China, Mexico, and Canada, that's about $1.5 trillion of trade that we have, at about an average about $500 billion each with each country. And so based on those tariffs, the way they were written in the order, that's about a 1.4% inflationary increase on products that we import as a collective across. So it's not a huge hit, Nicole, but of course the market interpreted it as the sky is falling very briefly, but now the market's recovering and it looks pretty good.
Were you in fact buying this morning and saying, "Oh, this looks like a good opportunity"?
No, we were taking a pause actually to see what the fallout was actually going to be first. We could end up further down by the end of the day than we are right now. And so, we're going to take a pause for today and just kind of take it all in.
Yeah, and look, I mean, they had a conversation, right? You have the president of Mexico who spoke with President Donald Trump. And in fact, they had a good, quote, a good conversation. And now the U.S. paused the tariffs on Mexico for 1 month. That brought the market back. But volatility is here. And volatility can bring opportunity. I'm sure you're watching for volatility throughout, not just January, but this whole 2025, right?
Well, that's correct. And so, the market is locked and loaded for volatility. We have a lot of swings on a regular basis without much news at all, and a lot of the high-flying stocks, because we're really at the end of this bull cycle market. In theory, even though the multiples across the board for the broader market indicate the market's got a lot more room to catch up, the question is, will it, and will that broadening occur under these current circumstances? And so, it's anybody's guess right now. But what we like today, Nicole, is really like things that have really strong fundamentals that we know are growing at double digits. That's very important to own the perennial names today in this type of environment, because even if things become very, let's say, economically stressed, then these companies will continue to do well. And that's important. Right. So you want to recheck your portfolios now.
So you're looking for strong fundamentals, and Mag 7 aside, can you name some names or some sectors that seem to be probably good for a portfolio?
Besides the Mag 7, I mean, you're taking away my favorites right now, Nicole. I mean, I've got 4 or 5 really good favorites. I like JP Morgan. Morgan's is in a really good space right now. They're doing very, very well out of the banking group, financial services group. But other than that, I really like the Magnificent Five at this stage of the cycle. And those are the companies that I'm referring to that will do well, even if the economy contracts, flatlines, the dollar falls, exports look more competitive despite the tariffs. And so that's kind of where we are today.
Yeah,
but
which ones are your favorites? I know Meta's in there, right?
Yeah, Meta's been my favorite for the last 3 years. And that's our largest holding here. But I will tell you that we really like Meta. They just blew out their best number at $48.4 billion last quarter, up 21% year over year. Their net profit went up 49% year over year. They're making $43 for every $100 they earn, and they're reinvesting in the business. But more importantly, their chatbot just reached 700 million active users, Nicole. And so when you get that kind of inertia, that's a big deal. And so plus they've got 4 billion monthly global users now. And so on all of their platforms between Instagram, Facebook, WhatsApp, Messenger, and Threads. And so, I mean, they're just a dynamic social media powerhouse that needs to be part of everyone's portfolio.
And also Alphabet, Google you have in there as well.
I like Google and I like Meta. I do like Apple. They had a really good report. They kind of bucked the system here the other day with their report. So they're, but I do like Apple. I think those 3 stocks right now are part of the, really undervalued from what their true financial worth is going to be. When compared to companies like Walmart or Costco, which have a higher multiple, and they're trading at about 20 to 25, 30% higher in multiple value than those 3. And so which one would you rather own, a grocery store margin, or would you rather own something that makes $30 to $40 for every dollar they have in sales? I think that answer's obvious.
Yeah. And NVIDIA. I mean, it may seem obvious to some that this has been a great performer, and I know it's fluctuated, but for the AI play, for the long term, Jensen Huang, I don't know, you're still an NVIDIA fan, right?
Yeah, I'm a really big NVIDIA fan. I'm a big NVIDIA fan of buying the dips. I mean, it hit 115 today. I mean, that's a great opportunity for folks to get in. I think if you're trading NVIDIA stock, you're looking at the upside potential over an 18 to 24-month period, because we kind of know what's going to happen this year. We know the second 6 months of the year, things are going to start ramping up as they can meet production for their chip demand. Right now, there's too much demand and not enough supply. And so the second half of the year, they plan on making that up. And we start to see revenues really take off next year more so than this year. But they could surprise. And so this is one you want to bank for the next 24 months.
Understood. Big picture, I know we have a jobs report on Friday, but I think that if I really had only one question to ask, would you say this will be a winning year on Wall Street for portfolios?
It's definitely going to be a winning year because of the Trumpian effect and all things and the economic inertia they're going to create with tax reform and extending the tax cuts, maybe lowering corporate taxes, rebalancing the budget, cost cutting, and getting a hold of having fair trade instead of free trade that's imbalanced. I think that's going to be a big boom this year for America.
Yeah, so you expect some things like out of Washington, some of the policies to help overall. And what about the jobs report this Friday? Are you looking forward to it? What are you going to watch for?
Well, obviously, we're hoping that it ticks up a tad. We'd like to see the Fed accelerate their projection for a rate decrease, but we need the jobs number to obviously compensate in the sense that we're going to see unemployment go up and demand for jobs fall. And so if that kind of stuff happens, then we'll see the Fed will fall in line quicker, even though they're delaying rate cuts for the time being. But, I kind of see the tariffs as almost a Fed action here, Nicole, because if it slows the economy down, it'll slow inflation and purchasing down, which will be ultimately good for the numbers. And so I've always said from the time Trump was elected that he's going to try and kill the economy in the first year of his administration, or at least make the economic numbers go south so he could force the Fed's hand to lower rates. Because if he doesn't, productivity is just too strong.
Jeffrey Small, Arbor Financial, great to speak with you. Thank you so much.
Thank you, Nicole.
Good names to watch as well.